Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Friday and from the United States, there will be no important economic headers to be released. Only we will be waiting for Fed Williams and Fed Rosengren to deliver their speeches, and it's highly important. Watch also for US equities and US dollar movements. That's all. We'll move on now to the numbers. On the last trading session of Thursday, we have had a trading range from 1488 to 1504. Numbers are rounded and the market is still opened. Gold spot is expected to print a close price above 1400 and the market is still opened. Gold is trading in a bullish trend above its all daily simple moving averages, except the 20 days daily simple moving average located about 1511, and this market is completely bullish above the 50 days EMA 1486. For the RSI readings, we are overbought on the weekly monthly charts with moderate readings, and the supports are seen at 1492, followed by 1483 and then 1480, and for the resistance levels it's seen at 1500, followed by 1505 and then 1513. That's all for the numbers. We'll move on now to the trading strategy. Gold is proved to be trading in a bull market, which means it's not a necessity to head back to the 100 days or 200 days daily simple moving average or below. It's an ongoing rally that will take a breather just to fix its overbought condition, and then it will resume. This is up to my belief so far, and this time is different, and there are factors that supports this theory. The first one, that this is the first time we got this negative yielding bonds as a global phenomena, and the second factor, this is the first time in the history of the modern finance that a yield curve inversion happens in an environment of negative yielding bonds, and nobody yet knows the implications of this. The third factor, it's the first time the interest rate sparks as high as 9% on the overnight lending operations in the history of the banking, forcing Powell and his colleagues to print about $150 billion and inject them into the system as liquidity crunched in between banks. This is awful. This means either the Fed or the banks are in insolvency situation. You don't need to wait to hear that one of the commercial banks went bankrupted to believe that the situation is totally different. When Barack Obama was elected as the President of the United States, the debt of the United States was only $8 trillion, and the Federal Reserve Bank at his days took interest rate back to zero and hiked only one time. And when it was handed over to Donald Trump, the debt was 18 trillion, and the Federal Reserve Bank acted as unrealistic, and if they were living into some other plant, and they hiked interest rate 11 times. And I believe Trump is going to hand it back to them with maybe 30 trillion worth of debt and a weird economic outlook. They say you can catch more bees with honey than with vinegar, and this is the game that the Federal Reserve Bank is playing. They want to keep the funds in flow to the United States from all around the world, so they could manage liquidity. Bottom line, they are insolvent, and they are like someone with so many debts, and he's covering debts from other debts. If gold could reach to 1450 and you don't buy it, I mean physical gold, I believe you are missing a very important opportunity. Gold could continue to rally, and it will continue to rally with a trade deal and without a trade deal, and it's going to minimum $2,000 by 2020, and with a scope of maybe $5,000 to $8,000 if the financial collapse takes place, where the fiat currency won't be acceptable anymore. For trading purposes, buy dips in gold. Any $15 to $20 dip is worth buying. Stock silver around 16.6 to 17 for around 229, and 1450 to 1483 is a buying zone for gold. Gold is not going to collapse. Financial system is the one that is going to collapse. Always manage your margin requirements and look for a run that could take gold to 1650 to 1700. Also, from next week onward, short the US indices for TB 7000 for Nasdaq, and 20,400 24,400 for Dow, and 2,780 for the S&P. That's all for today. Thank you guys for watching. I'll see you tomorrow in another video.